Trump's geopolitical and economic policies have generated a lot of uncertainty in traditional markets, and consequently, we've seen a general downtrend in crypto markets recently too. However, when Trump made a post about a US crypto reserve on his social network, Truth Social, on Sunday the 2nd of March, the crypto market perked up massively, even if for only 24 hours before dropping back down. But what even is a US crypto reserve? Well, in the next few minutes, I'll run through what this reserve could potentially look like and what cryptos could be included. So this was the post that he made on Truth Social. He made a slight blunder in the first post, not including Bitcoin and Ethereum, and he fixed it up in the second post where he mentioned them together with Ripple, Solana, and Cardano, right? And he, as I say, he said the US will have a crypto reserve. Now, at a quick glance, it's super exciting to see the president of the richest and most powerful nation in the world posting positive things about crypto and suggesting that the US will begin to hold these assets that people in crypto have been holding for years. However, there's nuance here. What does he mean by a US crypto reserve? Does he mean a strategic reserve, or will the cryptos be held some other way? To answer that, we need to start with what a strategic reserve actually is. But before we just start there, if you want to set up your first crypto wallet so you can take part in the growing global crypto economy, plus access over $1,900 worth of courses entirely free, then click in the link in the description below. Now, strategic reserves are generally used for government stockpiles of critical resources or assets to ensure stability, security, self-sufficiency during emergencies, or market disruptions, right? So they're designed to address immediate or short-term needs, such as, economic shocks or geopolitical instability. Common examples are, physical goods like oil, pretty important resource to have in case something goes wrong, food, medical supplies, or important financial assets like cash and gold. If you believe that Bitcoin is comparable to digital gold, which is what most people in crypto do see Bitcoin to be, and I've written posts about it, and you can find them and check them out in the past, then it makes plenty of sense to have a strategic Bitcoin reserve. However, this doesn't necessarily extend out to altcoins like Ethereum and Solana. Even Peter Schiff, who's notoriously hates on Bitcoin and has been speaking badly about Bitcoin since 2011, mentioned this in an X post after Trump's post. He said, "I get the rationale for Bitcoin reserve." He doesn't agree with it, but he gets it. We have a gold reserve. Bitcoin is supposedly digital gold, so let's create a Bitcoin reserve too. But what's the rationale for an XRP reserve? Why the hell would we need to do that? So a funny thing is, people kind of got onto Peter Schiff because he's been speaking badly about Bitcoin forever, and now he's sort of hinting and kind of agreeing that Bitcoin's digital gold. But anyway, the point here is strategic reserves are not for buying up, company stocks or anything like that. So why should they be used to buy altcoins that don't have a strategic importance? Most would agree that it doesn't make much sense to do this with a strategic reserve. However, it might make sense to do this with a sovereign wealth fund, which Trump's administration also recently announced back on February the 3rd. This is him signing the executive order. Trump signed the executive order for the very first sovereign wealth fund in the US history. So what is a sovereign wealth fund, or SWF? Well, a sovereign wealth fund is a government-owned investment fund that manages a country's surplus wealth, what's left over after expensive, to achieve long-term financial goals. You can imagine that if the government is fiscally intelligent, i.e. smart with their money, and finds themselves with additional money in the coffers at the end of the year, they can put it to work to generate wealth for the country for future generations. Two of the largest and most famous SWFs are those from Norway and the UAE, two countries that have huge oil supplies with relatively small populations, and therefore they generate excess revenue that can be intelligently invested, right? Now, you can see a list of the top 10 SWFs here, and it's no surprise most are oil-rich countries. There's Norway, UAE, Kuwait, Saudi Arabia, Qatar, right? So they generate loads of cash, they've got this cash left over, let's invest it. You'll notice China also has two of the largest SWFs. It isn't oil-rich, it isn't as oil-rich as the others, but since it's a centrally managed authoritarian government with a huge trade surplus, it can, one, act fast. That's the pro side of being authoritarian, if any, is that they can move very fast. And they can, because they have such a huge trade surplus, everyone buys from China, they have all this excess trade revenue to fuel their SWFs. Undoubtedly, when the US makes an entry into the SWF game, they'll become one of the largest, most important ones too. Now you might just ask, doesn't the US have the biggest debt out there, 36 trillions? Well, you can have an investment fund that grows faster than the debt, so it might make sense to sell certain lands, unlock capital from the US from the country, and use that to grow their SWF to counterbalance their debt and eventually kind of pay off their debt, right? Or grow at a faster rate than their debt is growing, and hopefully keep their debt coming down, right? That would be the ideal goal from an economic perspective. Now, the big difference then between a strategic reserve and a sovereign wealth fund is in their time horizon and their goals. While strategic reserves are there to be deployed as necessary in specific moments, like a crisis, an SWF is intended to be run like a government-owned investment fund, as I've been saying, generating long-term returns. You can see kind of a separation here, right? Strategic reserve is more for security and stability. It's generally like physical goods or liquid assets, which Bitcoin, falls into a liquid asset. With kind of the idea is to be ready and respond to crises in the short or medium term. Whereas a sovereign wealth fund is for wealth generation and preservation in the long term for the country. They can be in diverse financial investments. Some of these aren't necessarily that liquid. They can buy in something that takes 10 years to sell, but it trends upwards. They can have this focus on economic diversification and essentially just growing the wealth, right? They're two different concepts. So considering Trump's administration is discussing a crypto reserve, here's what I think is actually most likely to happen. Bitcoin at this point is kind of simply acknowledged and accepted as the most important of the cryptocurrencies in the entire space, right? Its market capitalization represents over 60% of the entire space, and it's, as I said earlier, often viewed as digital gold. Now, although projects like Ethereum and Solana are sufficiently decentralized at this point and have become incredibly important networks in crypto and assets in the space, they don't represent the same thing as Bitcoin. ETH and Sol are somewhere between digital commodities like Bitcoin and shares in a network. The asset is obviously closer to a commodity than a share. However, these networks ultimately still compete with each other for users and apps, and could one day be entirely superseded by some other competition and therefore lose value just like a company, stock and share can, right? So that's quite a glaring difference to, digital gold. Meanwhile, with Ripple and Cardano, they have even less solid arguments, to fit into a strategic reserve. Sure, they are among the most valuable cryptocurrencies out there by market capitalization, since they have, large holder bases, but these networks are they're less decentralized and less widely used than Ethereum and Solana. So these are among the most valuable currencies out there, XRP, Ether, Sol, Cardano. But they're not quite Bitcoin, right? My guess then is that Trump's administration eventually does announce their strategy for the crypto reserve. When they do announce it, I think they will buy up Bitcoin as a strategic reserve, which could be huge amounts of Bitcoin strategically, and then choose select crypto assets for the sovereign wealth fund. That's my guess, right? And a crypto reserve is just a way of kind of saying, simplifying the whole thing, right? Even if it's split out into several different buckets, right? Now, the task of figuring this out has largely fallen onto the administration's crypto czar, David Sachs, who's made it clear that the SEC was previously treating crypto companies poorly, and he's going to make this administration have a much more crypto-friendly approach. David Sachs is surrounded by very knowledgeable people about crypto and should get some good counsel to make the best decisions. Also, the Treasury Secretary, Scott Bessent, and Commerce Secretary, Howard Lutnick, are likely to be responsible. It'll probably fall predominantly on the Treasury, on Scott, on Bessent, for an eventual strategic reserve and sovereign wealth fund. And both are fans of Bitcoin and crypto. So what about other major assets like Binance, right? BNB token, what could that be in a sovereign wealth fund or some version of crypto fund, a crypto reserve? Well, it doesn't fit into Trump's America First narrative of supporting American crypto projects. So we're unlikely to see Trump's administration holding it. And the same goes with any other crypto asset that's not been made by people in the US. So here, Ripple is a company from the US and Cardano are, and so Solana. So that's why those are kind of included, apart from the fact that they're high market cap. Now, all of this is still speculative for now, and we still have some time before any firm decision gets made on any sort of crypto reserve, right? Trump gave David Sachs 180 days from when he signed the executive order, setting the deadline to around July 22nd, so late July. The most important thing, though, is to pause and reflect on just how much of a different environment the crypto industry now lives in. In the previous administration, we had constant fear in the market as the SEC under Gary Gensler would be constantly going after all sorts of different crypto companies, right? However, under Trump's administration, we've seen a full 180, U-turn, and incredibly, the conversations we're having now are about whether the government is looking to include too many cryptos, right? It's like, is it too much to have Solana in a reserve? Does that make sense in strategic reserve, right? And it's a full 180, right? The SEC has dropped their ongoing lawsuits against loads of companies in the crypto space like Coinbase, Kraken, Consensus, and plenty others, and has even recently announced that they don't seek meme coins as securities, but rather as collectibles, which is just such a big change from what we had before. I've been in the space for almost a decade now. I've seen so much FUD, fear, uncertainty, doubt over the years. And there's been a running theme for as long as I can remember that someday the governments would try to shut down crypto. And now it's the opposite. What a long way we've come, right? And it's not just the US, right? Governments around the world are beginning to really embrace crypto. The UK's come out and said they want to be a crypto hub. Small countries like El Salvador and Bhutan have been mining and buying up Bitcoin. And now the UAE have actually bought Bitcoin through the BlackRock ETF for their own sovereign wealth fund. We're discussing sovereign wealth funds. They've got over $450 million worth of Bitcoin in their sovereign wealth fund. It's huge, right? There's honestly never been a more bullish time for crypto than now. There'll definitely be bumps along the road, but these sure are exciting times ahead. Now, as I said earlier, if you want to set up your first crypto wallet so that you can take part in the growing global crypto economy, plus access over $1,900 worth of courses entirely for free, then click the link in the description below, and I'll see you there.